So last topic of working capital management is overtrading. What is overtrading? Overtrading, okay, the other term is under-capitalization. Okay, I would like to highlight this because I remember there's some past paper asking students to define to the terms of or another terms of overtrading is under-capitalization. Under-capitalization it means overtrading. It is a situation whereby a company activities expanded too rapidly without correspondence increases in capital backing. So what does that mean? What does that mean? When the sales increase, right? So what's the consequence? Is account receivables increase, right? The inventory increase, right? So maybe at the same time, your purchases increase. So your AP also increase. But in a case, if the AR increase, inventory increase much faster than your AP increase, then your working capital increase faster, right? What's the problem of increasing working capital? It means you need to finance it by more cash. If not, if you don't have any cash or you don't have any financing plan, you may utilize by your OD, the overdraft facility. If it is the case, if your OD or the overdraft increases sharply in line with your account receivables and inventory, it means the company has some symptoms of overtrading. Okay, there's a nice symptoms of overtrading. As I share with you, the sales increase, receivable increase, inventory increase. Okay, short-term loan and OD increases as well. Okay, and here next is important is the liquidity ratio. I hope you remember what is liquidity ratios. Okay, like the current ratio, like the quick ratio. Okay, all these have already covered in the syllabus or the examination before. Okay, not in F9, but on some examination before covering it. So right now, I assume that you know what is a liquidity ratio. And 6 is cash balance drop rapidly, results in overdraft, as I share with you. Sales to asset ratios increases. Okay, so it means you don't invest a lot in fixed assets, but the sales increase significantly. Okay, increase in gearing ratio and fall in profit margin. Especially you increase your sales volume a lot by sacrificing your profit margin. Okay, there's the symptoms of overtrading as I share with you. And methods of overcoming overtrading is, for example, you increase your equity capital, means you have to increase your long-term funding. And you increase your margins, you increase your profits. To increase, it will help to increase your equity capital as well. And also you reduce the investment in fixed assets. For example, you release some of the fixed assets. In return, you go to the lease market. Okay, you can release some of the fixed asset capital into your operation, and to improve control over working capital. Okay, For example, if you increase the sales, to be cautious of the credit terms granted to your customers, okay? Because sometimes you increase the sales, okay? It doesn't mean you need to increase your AR. Maybe you have to tighten the control of AR, account receivables, and inventory. And also you can cut down the level of activity, okay, but sometimes your sales department doesn't like it, and increase gearing by long-term loan, okay, even if it is still slow. Also, you can consider franchising. Franchising means you only provide the goods to your franchisee, and they operate by themselves. So you no need to invest a lot on this aspect, but you have already made the sales to your franchisee. So here are the methods to overcome overtrading. And just one word about overtrading. If, for example, if you would like to go for the OBU, the Oxford Brookes University Bachelor of Science, the BSc program, okay. If you would like to choose the RAP, the project, the research analytical project about the company performance in terms of financial performance, then here the overtrading is one of the key items that you have to remember, those symptoms, and that you can refer to. Okay, just these are some tips for you if you are taking the OBU BSc program in future. So we finish